Hey everyone, welcome back to the channel. Today we're going to be taking a look at ULTY versus MSTY, two YieldMax funds that are pretty popular right now. I see a lot of talk and a lot of, especially on Reddit, talking about ULTY and of course MSTY we love, and sitting at a 90% distribution rate, lower than it has been after this month's announced dividend. I think it was around $1.50 per share. And ULTY has kind of been kicking it up as of late and getting a lot of buzz, but it's had a rocky path since inception. And in this video, I want to break down, which by the numbers, because that's the best way we can do it, is see what happened in the past, is which one is performing better and what you should put your money in, right? So if you guys are new to the channel, please subscribe if you like this content to see more like this, and let's get right into it. So you can see the distribution rates. MSTY is following MSTR. ULTY is actively managed. I think the calls change, the assets that they're working on change, and it depends on the fund advisor, and changes, daily, if not weekly, if not daily. So they operate different. One is based on a particular asset, the other one can change, right? But both the yields are high. But the best thing I want to do is go into the stock analysis here, and like we always do, just kind of look at total return. We'll start at the last year and just kind of look at, would you really want to be holding this? And we need to look at kind of all the YieldMax funds and kind of say, yes, first, the most important thing in my mind with these YieldMax ETFs is you have to really believe in the underlying asset first. ULTY, you don't really know what that is all the time because it's changing, right? So it's hard for you to believe. You're putting a lot of trust in the fund managers with ULTY, so just keep that in mind, because you don't know already what the asset is that they're choosing. Like with MSTY, hey, this is MSTR and Bitcoin, so you know what you're getting, right? And with ULTY, you don't get that. But so coming back, let's go to all first so we can see the inception, from kind of inception. Does this, yeah, from, I guess, when they both have history. This is 599, 777. I'm guessing they both have had splits. But just from inception, look at the difference. This is total return as a percentage. Going to a year, 112 to 14. Year to date, you can see they both made like lows during the same time. ULTY pulled back further than MSTY, which is kind of crazy and not something you want, because MSTY is supposed to be more volatile. Um, and you're not getting value for that price and total return. And for 6 months, they're kind of, after this pullback, they're pretty close, 3%. That's not bad. But in a month, even, you can see ULTY has pulled away. So short term, ULTY looks good. But it was coming off some very depressed lows, and maybe this, because it is actively managed, the managers are doing better in this period of time, or made some good picks, right? Now, that being said, it's all fine and good if you're your fund manager, and this is, I'm not shitting on YieldMax or the people managing this, but it's all fine and good to have a good month. But going back, and we'll just take a year's data, you know, that's, very, I mean, 14% is great, but when you go and look at how much, this is your total return. When you look at the stock the stock price change, it's down 50%. And it doesn't look like it's, even though you're getting more yield in ULTY, it's not recovering. At least with MSTY in 2004, you saw, you're seeing when Bitcoin goes on a run and MicroStrategy goes on a run, you are capturing some of the upside. Right now, it's trying to crawl back and, capture some upside. You really need these underlying assets when they move up to move up slower. So maybe over time, the yield might come down, but the underlying might capture more of the gains with the strategy. But granted, it's just hard to look at this and say ULTY is a good choice compared to MSTR. And that's kind of what I want to go on in this video. I really hope that we can start some discussion down below in the comments. I would love it if you guys could let me know what you think, or if you have an argument to this. But straight from the numbers, you know, it looks like who the clear winner is, 100% more total return in the last year, and 20% more in the last in the year to date. So hope this these type of videos help you kind of visualize this better. If you like this kind of content, hit the thumbs up and let me know in the description, and we'll see you in the next one.